Good evening, everybody. This is John Locke from Locke in Your Success, and this is the Locke in Your Success Trade and Market Update for December 8th, 2013. Before we get going, I'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we are not making any specific trade recommendations. Also, any trades and/or results covered in the presentation may or may not be live trades. In the event they are computer simulated, we do the best we possibly can to make sure they're accurately represented. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. All right, it's almost time. We have our new website that will be up either late this week or early next week. And along with that is going to be a move from the trade updates over to a webinar on Monday morning at 9 a.m. I'm not sure if this is going to get done this week. If it's not done this week, then it will be done next week. Basically, the best thing for you to do is to keep an eye on the website, and you'll notice there's a big change from where it is now. It's going to look pretty much completely different. And if you see that, you'll see a link on there to go ahead and sign up for a free webinar. So go ahead and do that at lockeinyoursuccess.com. All right, let's move along here and take a look at the markets. Okay, here's our favorite trading instrument, the Russell 2000. If you remember from last week, we were more or less expecting the market to pull into more of a sideways movement, which it did. It spent the first part of the week coming down, and it had a pretty good drop. And we kind of leveled out and bounced up again on Friday. So not surprising here. Could we push a little bit higher than these highs? Yes, we may. However, I'm still more leaning towards that we're going to stay in this sideways range here for the remainder of the cycle anyway. And I would expect any upside movement to be limited to the 1150 area, possibly slightly higher. I just don't think we're going to see the upper end of this range this month. We shall see. December sometimes is surprisingly bullish. If we look at the NDX, this did break out higher, and it held on Friday. So this might be a sign that things are going higher, although I wouldn't put too much stock in that unless we see the other indices follow and break out higher. As far as the SPX, I still have not drawn my lines back here on the charts. However, same deal. We got a bit of a pullback and a bounce. For this to come up and retest the highs wouldn't be a big surprise here. However, in general, I am expecting it to pull off sideways. If the NASDAQ takes off, and it looks like this one's probably going to be the next to break new highs, and if that does break higher, then we may end up going a bit higher. But as for right now, like I said, I'm still thinking sideways. If we look at the Dow, pretty much the same thing. Sold off, tested support, started to bounce, and coming up to new highs wouldn't be a surprise. More than likely, we're going to run sideways. But of course, watch everything for breakouts. And I believe that's all four of those. So nothing's changed from last week. We're still expecting more or less a fairly wide sideways pattern. Okay, let's take a look at what our trades have been doing. And we'll look at the January Bearish Butterfly first. Basically, we had absolutely no adjustments. We've just been sitting here. The sideways movement's been good for us. We are up about $3,000. And if we take a look at our analyzed graph, we're pretty much in the center of our position. Everything looks perfectly fine. So we'll go ahead and move on to our January V Condor, which also had no adjustments this week. This position is up about $1,100. If we take a look at the analyzed graph and back it out a little bit, you can see we're just hanging out to the upside of our V, and everything is perfect. It would be beautiful if the market continued to creep up here. I don't think it's going to happen, but it would make certainly for a nice trade in January. Let's move on to our December trades, which did get a little bit more action. We'll first go over the December ROCK trade, which was actually the most active of all the trades this week. This trade in general doesn't really like to be kicked back and forth, and that's kind of what happened. And as of right now, we're sitting in 10, 1150 butterflies, 10, 1110 butterflies. If we take a look at what happened during the week and we scoot back to Monday, When we kicked off the week, we were in 6 of these 1170 butterflies, and we had our 10 1110s, we had our 10 1150s. We were down about $1,700 for the month. Our position looked like this. Of course, the market, this is actually a very nice looking position, especially if the market continued to creep up. However, that's not what happened. The market backed down, and what happened, we start pulling off these 1170s. So if you come to the end of the day on Monday, you'll see that we sold 4 of these 1170s off, and we only have 2 left. If we come Tuesday, the market continued down. We got rid of the remaining 2 1170s. We're down about $1,100, and we were looking like this. And of course, on Wednesday, we had that continued down move. So what we did on Wednesday is, according to the guidelines, what we do is we roll back into what we call cat position, where we take these 1110s and we roll them back to 1190. Well, I don't always do them all at the same time, and when we started rolling this back, I rolled half of these back. I got 5 of them back to 1190, and the market started to reverse pretty good. So it just held that position. So by the end of the day, we had half of these down at 1190. I will show you the end of the day on Wednesday. And this is how we ended up Wednesday. We took half of these and brought them back here. And we were able to hold the position on Thursday. And we actually drew down a little bit because we had that big volatility increase. And of course, we had a fairly large up move on Friday, or at least intraday it was fairly large. And on Friday, I ended up pulling those 1090s back to 1110. And the position at the end of the day on Friday looked just like this, and we're pretty much right in the center of the position. So we're fairly close to expiration. Money should come into this very, very quickly, as long as the market stops swinging around so much. So that is the ROCK trade for December. Let's see, the M3 trade also got one adjustment on Friday. So let's kind of take a look at the website M3 trade, which is here. If we go to the beginning of the day on Friday, this is what our position looked like. Right here in the morning, and our delta started to climb a little bit too high as we pulled into the afternoon, and the market kind of retraced a little bit. So we ended up rolling up the backside of this spread. We took our shorts all the way up to 1100 later in the day. So right now we have our shorts at 1180 and 1130, 1030. And if we close this and move ahead to the end of the day, we ended up making our adjustment by rolling these up to 1100, 1050. And here is what the position looked like at the end of the day on Friday. So that's the M3 trade. And last but not least is the December Bearish Butterfly, which was closed according to our 21-day expiration guidelines for a reduced profit target. All I did during the week is I sold off some of these 1210 butterflies on, I'm sorry, not 1210, 1160 butterflies on Wednesday. We had 3 of these on, I just sold 1, so that now we only have 2 on the downswing, just to do a minor delta correction. And then back on the upswing today, we came up into here. I closed this right at the end of the day for approximately 7,600. I'll have the exact number when we do the yearly update, or the December update, when we close all the trades in 2 weeks. So this is a nice 15 or 16% profit for the month, and a nice trade on the December Bearish Butterfly. The January Bearish Butterfly looks great, so all is going well. Oops, we actually have one more trade. Let's take a look at the December V Condor, because that actually did get a small adjustment this month, or this week. On Monday, all I did is I came in here on Monday and I took our 1130 call up to 1150, and I took our 1150 put down to 1130, 1050 put to 1030, just to widen this out. And I did that because the market looked like it was coming down. It was going to get caught in this range somewhere on the trade. I actually probably would have been better off leaving it alone, but like I said, I wanted to make sure that we got our profit level up over 3,000 for the month. And as of right now, we should be able to close out the month for around $3,300, as long as it doesn't do any, we don't have an absolute massacre in the market, or we don't get some really crazy up move. Of course, a grinding up move over the next couple weeks would actually be helpful. We may end up getting up in here as long as it's not too hard. That's all I have for now. I am expecting continued sideways movement in the market as I discussed. Also, keep your eye open for the new website coming up because we're going to be shifting the format. So keep that in mind, and I'm excited to talk to everybody once we do that. All right, have a great week, everybody. Thank you, and good night.